presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. Hey, John, what's going on, brother?
Hey, Tom. Good afternoon to you. How are you?
I'm doing great, man.
I want to thank you, first of all, before I ask you about the stock. You and the board and all the gang at TFNN. I had a really, really good year after the October call you guys made. My 401k is up 72%.
Congratulations, man.
A couple of things I made with Coinbase and other stocks that I made, and I've had a good year.
And we appreciate you growling and prowling with us, man. That's a beautiful thing.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 3 p.m. Eastern Time. 1 hour left to go in trading, and you have markets right now. Right near the lows, another negative session. Yesterday, you were trading at 67.54 in the S&Ps. Right now, we're negative by 25 points on the session. We're off by about 0.4%. We're trading at 66.88. NASDAQ 100, we're off by about 100 points or 0.4%. You see the acceleration early today. We make lows in the market just after noon Eastern Time. We're just off those levels. We're off by 0.4%, 24,727. We're up at 25,000 a couple days ago. Dow right now, negative by 198 points, 46,439. That's a loss of 0.4%. And the Russell off by 19. As I talked about in the top of the hour update, gold contract. We got some dollar strength. You got gold pulling back from the highs. Gold right now trading off 1.6%. We're off $61 right now at $37.54. Now, we had an all-time high yesterday. So, not too surprising. You take a look at this weekly, as in we get a little bit of a pullback from an all-time high. The weekly looking ever strong. We haven't had the volume. The volume this week is not showing up on the charts just yet. But look at the relentless volume the last few weeks, right? Million contracts the week of September 1st. That was a short trading week. 1 million contracts on September 8th, 1 million contracts September 15th. Strong volume as we push higher. And in terms of the extension we just got, you back things up to where we were when this run really began. Now, we had a little bit of a consolidation for almost a few years. February of last year, gold trading just above $2,000. Your breakout, barely any pullback, right? We're talking about almost a straight line move. If you count the pullback that we got from October until basically the middle of November, barely. It's a 1 to 1.618. I mean, it's just a remarkable run. 38.24 gold, though, backing off from those highs, particularly volatile. We jump over to the dollar right now, as I mentioned. We have yields higher, and you're looking at dollar strength today, 97.89. And yeah, we got the 10-year right now. Lows of the week. Right? 112.19 we just made. So you're talking about lows of the week of the 10-year right now, off by 8 ticks, and we're pushing almost 4.16% right now on the 10-year. You jump over to Alibaba. So they're going to spend $50 billion on the race to heat up with AI. They're going to go full stack. They're going to have everything. And you got Chinese chip stocks trading higher today. They're catching a run after NVIDIA and the likes caught a run when NVIDIA is going to be investing $100 billion in OpenAI. And Oracle accelerating and then decelerating. Pretty remarkable, the roller coaster this week. Actually below where we were on Monday. All right, we jump around to some of those gold equities today. Just taking a look. What's been remarkable. Okay, now Harmony just comes up. You're talking about almost testing the highs from where we were in April, 1877. We just hit 1871 yesterday. How's that? 6 pennies from the highs. Now, you had some nice volume yesterday, but boy, the volume on the close on these equities on Friday, folks. If you weren't listening to Monday's program, Harmony, for instance, 15.8 million shares on the close of Friday. Now, Friday was options expiration, so a lot of volatility and a lot of volume on the close with options expiration, third Friday of the month. But across the board on these gold equities and a pullback today, you take a look at these equities. For instance, like the XAU. Yeah, well beyond a 1 to 1.618. And you really back up these ETFs, folks? How about 15 years later, right? The highs of December 2010, you finally get above it, you escalate above it. And we're sitting right now just off those highs, but we're getting a pullback today. XAU off by 3%. HUI, actually, check this out. Yeah, didn't even make the highs. Now, maybe we will. Gold. Still strong as rates, Fed in focus. With rates facing pressure to the downside, dollar facing some weakness. But on the heels of that Fed meeting, rates actually rising. All right, we talked about Alibaba, we talked about NVIDIA, and yeah, you're talking about an acceleration. Pretty remarkable. You get the investment. NVIDIA, for instance, just yesterday with that investment in OpenAI. We jump around to some of the other Magnificent Seven. I'm going to go short term. Microsoft right now, up about 0.2% right now. You jump over to Google shares, particularly volatile Google, off by 1.4%. Boy, Amazon's had a rough week. You look at yesterday, you're at 228. We're trading lower. We hit 219 today. We take a look at the daily on Amazon. Yeah, you got some real selling on Friday. And look at how it's continued. Yesterday's volume as well. Almost 71 million shares yesterday. Only second to 97 million in the last couple weeks on the downside. And you got this low out here from their last earnings when Azure missed greatly. Right? You get that acceleration, actually break above the highs. Looks like that's where we may be heading. Amazon off by 0.2%. Well, yeah, you were up above 224 in the pre-market. All right, we jump over the crude market. So crude catching quite a bid. Put this on a daily. We're just in a consolidation, really. We were as high in the beginning of this month, maybe $66. Take a look at the volume on crude. Yeah, pushing about 253,000 contracts. Crude just cannot catch a bid. You think about political, tensions ratcheting up, Ukraine, Russia, NATO, and still we have crude under $65. Just a testament to how crude's struggling to find a bid. All right, we jump around to some of the streamers. Netflix down by 1.5%. Let's go back to a 5-minute chart. Jump over to Disney. They're raising their prices yesterday. Disney up by 0.8%, 113.17. Paramount Skydance been on a tear recently, down by 1% right now, 19.52. And you jump over to Warner Brothers Discovery, up by about 0.4%. We'll see if that merger or that acquisition takes place. All right, we jump back to these indices. S&Ps right now, yeah, negative by 26 points, 66.89. It's going to be interesting. 45 minutes left to go in the trading day. And I say it as in, these markets for the leaders right now, the likes of NVIDIA, Oracle, right? Amazon. Jump over to Apple we haven't covered yet. Apple off more than 1% right now. Now, they didn't have the sell-off yesterday. Some of the equities did. But even Apple off by $3, 1.2%. We jump over to Tesla shares today. Man, Tesla's been on a run to the upside. You're challenging the highs, up another 4%, up $16 to $442. All right, folks, stay tuned. We're going to come back. We got a great guest, our man Sean Edwards, Vice President with Direction, institutional ETF strategist. We'll be coming back. We'll talk some markets. We'll talk some ETFs. Always a great segment. We'll be right back, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. Welcome back, folks. We got the S&Ps in the red, negative by 25 points right now. NASDAQ 100 off by 101. And right now, folks, we got a great guest. We have our man, Sean Edwards. Sean's Vice President, Institutional ETF Strategist with Direction. Folks, head on over to the front page of TFNN. You'll see those beautiful banners up there. And I couldn't have planned it better. The one running right now is the Nugget and the Dust one. Click that banner, folks. Head on over to the Direction page and check out their beautiful lineup of leveraged and inverse ETFs. We're going to talk about some of them right now. We got Nugget and Dust up there, Sean. That's a perfect banner as we come into it. Good afternoon.
Hey, good afternoon, Tommy. Again, once again, thanks for having me on today, and happy to discuss some trading opportunities.
Yeah, you know, we'll get into the gold, but I wanted to ask you about, of course, you know, the chip stocks. And we have Alibaba today. They're investing $50 billion. Yesterday it was NVIDIA. Intel is even in the mix, of course, with NVIDIA investing $5 billion. You guys got some great products. I see. It feels like I wake up every day and there's a new headline, Sean, where somebody is investing $50 or $100 billion to build out AI. Talk to me about some of the products you guys have and what you're seeing in the chip sector, if you could.
No, absolutely. And you're absolutely right. There's so much volatility within the semiconductor space right now. We saw Micron beat on earnings. We're seeing news that OpenAI has a $100 billion deal with NVIDIA. And then news today is that China is actually banning NVIDIA's AI chips. So we'll see how that impacts the broader markets. But as I always say, opportunity is everywhere. And at Direction, we have tools for you to trade some of those themes. And particularly within the semiconductor space, we have a few different ETFs. So I'm going to take my time here. I'm going to run through a few ticker symbols, Tommy. But I'm actually going to start off a little bit differently. Typically, I focus on those individual semiconductor names. But I'm going to introduce to the audience one of our leveraged ETF pairs. The ticker symbol there, Tommy, is going to be AIBU and AIBD. And so that's a Direction Daily AI and Big Data Bull and Bear 2X ETFs. And the reason why I want to start there is because semiconductors have driven volatility. And really what's behind that volatility is the investment into AI infrastructure. So for those traders that are looking to trade those names that are benefiting from all the amount of dollars that are going into AI development, you can look at ticker symbol AIBU and ticker symbol AIBD. So once again, if you're interested in trading names within the AI infrastructure space, you can look at that pair. So now, get ready. We're going to go through a few different ticker symbols. As I mentioned at the top, Micron, they reported earnings, and what we've seen so far, week to date, $25 million in inflows within MUU. So that's a Direction Daily Micron Bull 2X ETF. If you're wanting to hedge the downward price movement of Micron, you can look at ticker symbol MUD. So that's one of our semiconductor pairs. If you're also interested in other names like NVIDIA or AMD or Broadcom or Taiwan Semiconductors, you can go to our website and we have a bull and bear ETF pair for those names as well. Taiwan Semiconductors is going to stand to benefit as well, simply because they're helping to support the manufacture of chips as well. And we've seen $14 million in inflows week to date within TSMX, and that's a Taiwan Semiconductor Bull 2X ETF. So a few different names. Those are individual semiconductor names. If you want broader exposure to the semiconductor sector, you can look at the Direction Daily 3X Bull and Bear semiconductor ETFs. And so that's giving you exposure to the semiconductor sector. If you're bullish, you will look at ticker symbol SOXL. If you're bearish, you will look at ticker symbol SOXS. And if you want broader exposure to the tech sector overall, you can look at ticker symbol TECL and TECS. And that gives you exposure to the Direction Daily 3X Bull and Bear technology ETFs. I'll stop there. We went through quite a few ticker symbols, but wanted to provide a few tools. So for those traders that are interested in AI, the development of AI, semiconductors, the semiconductor sector, or the broader tech sector, you can look at those names. Again, you can go to our website. We have over 100 different ETFs, but here are a few to start to trade some of the volatility within the semiconductor chip space.
And it's pretty cool that you're seeing inflows, cool as in, that's why the market's going up. That's why we're sitting near all-time highs, I guess. But still at these levels, yes, man, we got buyers out there, and you guys see it in the data, which is always remarkable.
Absolutely. Absolutely.
All right. You guys have a great lineup. Can we talk some golds? Because I know we got a bunch of people ready to talk some gold right now at highs. And, of course, I love Nugget. I love Dust. But please, if you could talk to us about some gold. You got some great products, man. And everybody's talking about gold right now, Sean.
No, and we've seen it, Tommy. Year to date, gold has crushed it. Gold's rallies being fueled by, Fed rate cuts, inflation, central bank buying of dollars, and then just overall geopolitical uncertainty and global economic issues that we've seen in the market year to date. In terms of inflows within our gold-related equity suite, we've seen in the Direction Daily Gold Miners Index Bull 2X ETF $14 million of inflows in Nugget week to date. So again, there are traders that are looking to take advantage of these short-term price movements in gold. Again, the exposure here within Nugget and then Dust, which is the inverse bear 2X ETF, giving you exposure to the NYSE Arca Gold Miners Index. It's not spot gold prices, but gold mining related equities that you'll have exposure to. So again, $14 million in inflows in Nugget week to date. And if you're looking at junior gold miners, you can look at JNUG or JDST, which some of you may be familiar with. That exposure there is to the VIS, the Global Junior Gold Miners Index. So again, gold miners, bull and bear 2X ETFs, whether you're looking at gold miners or junior gold miners, you can look at that suite, whether you're bullish or bearish, and you want to trade the short-term price movements of gold. Again, all of these ETFs, they're leveraged or inverse ETFs, so they come with a higher degree of risk. So they're not your buy and hold investments by any stretch of the imagination. You want to monitor these trades daily, in some cases intraday, depending on the volatility that we're seeing that's present in the market within the underlying index. In this case, it's going to be a gold miners index, so you just want to make sure that you're watching that index daily.
Sometimes those miners can be even more so, and that might be putting it lightly, volatile than the metal itself, folks, as you see from those charts. Quite the acceleration. Let's talk some rates, of course. Rates in focus. Chairman Powell, we got the next meeting coming up, maybe 5 weeks from right now. Talk to me about interest rates if you can. You get some great fixed income products as well, please.
No, absolutely. So again, we saw the Fed cut rates by 25 basis points for the first time since last December. And you saw that Fed Powell signal that they may have additional rate cuts this year. So for those traders that are looking for trading opportunities around interest rate sensitivity, we have a suite of fixed income related leverage and inverse ETFs. So TMF and TMV, we're seeing inflows within that suite. So we have traders that are anticipating further rate cuts or traders that are anticipating that rates will stay the same. You can look at trading this suite. If you're bullish, that bond prices will go up and that rates will decrease, you can look at ticker symbol TMF, and the inverse is the same. If you're bearish bond prices, you can look at ticker symbol TMV, and that's on the ICE 20-plus year Treasury bond index. If you're looking for the shorter end of the curve, so the 7 to 10-year bond index, you can look at TYO and TYD. So again, opportunities to trade around interest rate sensitivity. So again, go to direction.com, over 100 different ETFs. Make sure to review the education if you're new to leverage and inverse ETF trading. But again, we have quite a few tools for those traders out there that are looking for opportunities to trade.
Sean, I appreciate it so much, man. And folks, head on over to TFNN. You can click that banner. I'm over there myself. The amazing, whether it's the single stock ETF, Sean, and of course the lineup of ETFs talking about the different sectors like we went over. I appreciate the walkthrough, man, and I look forward to talking to you next month.
Hey, not a problem at all. See you, Tommy. Have a good one.
My pleasure. Folks, stay tuned. We're coming right back.
Developer of the Chapman Wave trading methodology has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. Always a great segment with Sean. And yeah, check out that Direxion.com, folks. Check it out. You can hit the banner at TFNN.com or just head right to Direxion.com. And the one thing I want to mention, when you head over to Direxion, you'll see Education and Insights up here. Okay, you click that. You head on over to the Leveraged and Inverse ETF Education Center. They got a number of great articles, folks. And if you're trading these leveraged and inverse ETFs, I encourage you to check it out because, as Sean said, okay, they're daily investment vehicles, and what you get is the long-term returns do not always reflect the daily investment when you work it out. As in, and there's some great examples on this one, which is called Volatility Matters, which is just part of this education center. Okay, they have a number of great articles. I just chose this one, but in terms of education on trading these, you really want to get your head around that they are daily investment vehicles, okay? And they walk you through a couple examples here, and it doesn't matter what time frame they chose. But in this example, they choose December 2008 to mid-April 2009, okay? And they choose different areas in terms of what the market did. And they're talking about in here, okay, which is so great, one of the ones that we just talked about, the Direxion Daily Technology Bull, TECL and TECS. It's two of the ETFs that we talked about with Sean. And what's cool is this is the 3 times, okay, and it sees the index return during that time was 6.6%, but because you got some chop, the 3 time would have been 19, but the Bull ETF returned only 9.9%, okay? There's drastic differences depending whether you get chop in a market. So in this case, maybe you would have thought you would have returned 19%, but because they're daily investment, you just can't take that over months. And then you go into the example if you get a trending market, okay? In this case, this one's talking about April 2009 to December 2009. When you trended, the index was up 35%. The 3 times return of that would have been 105, but guess what? Because of the way these daily investment leveraged vehicles work, you're actually scaling up to a certain degree, and you would have returned 157. So check that out, folks. There's some great education at Direxion.com. All right, with that in mind, we got another great one. Right now, folks, we're going to jump over to our man, Basil Chapman. You can listen to the Tiger Technicians Hour after my morning program every day, live at 10 a.m. Eastern Time. And don't forget, folks, if you haven't checked it out yet, it's right on the front page of the TFNN.com, the opening call. And folks, if you haven't tried it, even if you had, Basil has had some outstanding calls recently. Okay, check out the opening call. You gain access to the archive webinar he just did last month as well. And we're going to talk about some of that and some of his calls right now. Basil Chapman, good afternoon.
Good afternoon, Tommy. How are you?
I'm doing fantastic. How is beautiful Boston doing on this lovely Wednesday?
Actually, it's still warm, and I managed to squeeze in a little bit of tennis earlier today. So
you're a good man.
Good.
You got to stay on it. I'm always, it's great. You're so active, man. We all got to fight to find that time, and not fight, but it's so important to stay active. It's awesome, man.
Yeah.
So, speaking of active, Basil, how about this market? What are you looking at?
So maybe I just want to run through. Maybe I'll try to be in order as possible because this is really, for me, it's a very critical moment. Not that I'm anticipating anything very serious because the weekly charts are still so strong. But on the shorter term, I'll show you what I'm looking at. So the Dow, we've been long the Dow since April, and we've actually been longer than that. But the last bit that we added was in April. And we remain that way, but I'm very close, and just on a short-term basis, to buy some insurance because I think we're starting to get to an area. I'll show you on this chart. So what I always look at, this is what I usually look at. There's a background thing that over the decades I've developed, and it's really markets. I finally figured out a long time ago. Markets don't really drop precipitously unless there's bad news. So I've got I call it an index. It's not even an index. It's just my own thing called the Chapman Wave Dark News Cloud Cover. In other words, you can get sell-offs, but to get a persistent sell-off, you have to have something that impacts the market it just filters through the news media, and within a very short time, that becomes the theme. Tariffs, impeachment, whatever it is. Just it could be the funding, government funding. And that becomes a little tiny little note, and then the font becomes bigger and bigger until it's a headline. So that's what I'm looking at right now. I have a technique that I call the Chapman. This is the yellow. When you see yellow background chart with me, that usually implies that I'm about to put up the daily chart of the Dow, and it has certain areas. Let me see if there we are. Where I think of, you get an internal high, which is like an earthquake, and then you get the residual high. It's like the aftershock, and that could be less, okay. It could be the same, it could be a little bit more than the earthquake, but that's where turns occur. And it's the same at the bottom. And I've used these, and it used to be bonds, the yield used to do it, but actually what I've done now is it's based on other criteria. So I have what I call an internal high here, and I'm anticipating some kind of a residual high in the daily chart, but you can see this green 9-period moving average remains stubbornly positive, which I think is very good. But I'm looking at this, and now I'm going to get out of this, and I want to show you, remind you, just, I look at, we have some positions that we've got not that much left, but we still have them, like GE, Robinhood. These are stocks that Microsoft, that I, for my own our little portfolio that we had for a long time with these stocks in it, they're very important. So GE, what does it do? It makes a new all-time high today, 307.25.
Look at that equity! Wow,
that's amazing, huh? And we've had that from 198, and it's still holding well. And within that context, it's making an all-time high. Robinhood. We've got some of it still from the 16s, but very little left. But here it is. It's kind of a benchmark for me. It's the kind of the lay person who's into trading, into gold, into Bitcoin. And here it is at an all-time high, and it still looks very strong. Microsoft, we've got it from the 388, and here it is at 509. And it's just been, since it made that 555 high, it's been stalling. So when I put this together, I said, okay, and even Bitcoin, which was on a tear and did fantastically, and we still have our core Bitcoin through the IBIT, the IBIT, went to 125,200, and I've been saying for a while, it looks to me like it's stalling, but it hasn't broken down. If you look at gold, and I said to subscribers over the last couple of days, I said, I'm wondering if we aren't going to get a market pullback. I don't know how serious how deep it is, because you need that bad news, but maybe it coincides with the stock market itself. So we made a 75.28 high in the GDX. And it's pulling back a little bit here. I'm watching this very closely. The gold stocks have all done well. So
can you hang with us for the break, Basil?
Sure, I will.
Okay, folks, we're going to finish it up with Basil. We'll talk some more gold, okay? And we're going to talk some more equities as well. We're coming back with our man, Basil Chapman. We got markets in the red. You got gold off by $60 after all-time highs yesterday. Basil and I are coming right back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years, with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no cash or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. We got gold right now. First time we got a little bit of a bid. Gold just jumped almost $10 from $37.50 to $37.59. You get the S&Ps off by 26 points. We're talking to our man Basil Chapman, and don't forget, folks, right on the front page of TFNN, the opening call. Check that out. And when you sign up, folks, Basil just did a webinar last month, identifying trend changes, what action to take. You gain access to that immediately when you sign up. The archive, among many other webinars that you gain, but that one you just did last month. And Basil, if you could just talk for a moment to the listeners out there, because, you know, trend changes, especially in light of what you're talking about, but they're always important to have in your toolbox, kind of what you covered in that 90-minute webinar for subscribers, if you don't mind, please.
Sure. One of the most important things that I consider in terms of my own work is the 9-period exponential moving average over the 14. And I discussed that in great detail. And you can see in this chart right here, the weekly chart of the Dow, how the 9-period moving average has held way above the 14. That's the green line. This is the middle chart. The green line is above the black line. And it coincides sometimes with the MACD and the moving average convergence divergence. But look at this one particular tool. Look how it's held the price so nicely. So this is one of the techniques. The other was within the context of the monthly charts. What I had said was that look at that sharp pullback from the Dow, 45,073 back in December, and then it plunges 18% down to 36,661, and yet this green 9-period moving average right here, let's see if I can make it a little bit bigger, held fantastically. And that just said to me there was internal buying. So that's just one of the many techniques that I use. There you can see it. See that green line right there? And look at that sharp pullback. So these are, what I say is that the 914 can keep you in a position way longer than your emotions could even imagine that you could stay in. And that's kind of the case. And even now, as we're talking, look, the 9-period moving average with the Dow in the daily chart is way over the 14. So it's kept us in this position. And with that said, I also said I'm looking at different areas. And one of the areas was AI, energy. So look at this. We bought, I spoke about this a couple of times over the past weeks, IREN. This is in the, where did it go? Let me just opened up the chart. But look at this. This is basically, there you go. So this is,
look at it today, and up another 13%. Go ahead.
Unbelievable. Yeah, so we're at 22 just the other day.
Congrats, Basil.
And here it is, over a double since the we've only had this a couple of weeks. We got in, I believe it was like the 26th or so of August. So it's been, and what we've done is, I've tried to get us into areas that I think are longer term. This is now, because we've had such a nice position, we're taking little bits off, but I'm trying as much as possible, rather than to whittle down, is to whittle up, so that when we have really successful positions, instead of when it finally gets to this incredible like GE and Robinhood, which we actually started in the 16s, and right now it's at 126, but we've got much less than I would like. I've tried to now change the modus operandi with this particular market, and because the 914s are so strong, to actually start increasing our positions rather than decreasing on the ones that I think have the potential in 2025 to move higher. And I'm also trying to get into different price ranges. Not everybody can get into a $300 stock. They can buy less, but the thinking is that you could buy a little bit more if you buy $22 like we did with Iran. So I'm trying to do that, and that's what we discussed. I spent a lot of time saying the trend is your friend. We're going to try to use this. It's not just one indicator, but it's an indicator that really has been quite wonderful for us. The other thing that I use is the relationship of the XLF, which is the financials. Just look at this. This is amazing. This is the pink is the XLF, the S&P Select Financial Fund, and the blue, this is a monthly chart, and the blue is the S&P 500. Look at the synchronicity. Look at the way the tops and bottoms have been parallel. I couldn't believe when I've had this looking at it for a long time, but I spent about a year ago, I said, I've tried this with the TLT, I've tried this with many other stocks, and then I said, let's see where the banks go. Usually that's where the market goes. Our major tops have been when the banks have failed, right? The banks have done bad things, and finally that affected the market. And look how strong this is. All-time highs in this month. And look, all-time high in the S&P, all-time high in the XLF. So I spent a lot of time discussing why I wanted to go into different areas, why I was going to sacrifice some areas that I liked very much. I discussed them very often, but I also said within the context, say, of the IWM, I don't want to wait for gains, because this is a market that's giving you an opportunity. I want to take as much as we can. We want to be in what actually has even greater potential. That's not to say, and people ask me, what about IWM? I say the Russell 2000, I like it for 2025. I think it's going to make all-time highs. And look at the other thing I discussed is, look at these double tops. It's hard to believe that an index, you can understand it with a stock, but look at this, the IWM, the iShares Russell 2000 ETF goes to 244.46 in November of 2021. It dives down, it bounces around from 161 and retests 161 in October of 2023, and it goes what? It goes right back to 244.98, just about 55 cents above the previous high of 2021 in November of 2025, exactly 4 years later. It tumbles down to the 170 level. Where is it right now? 241. What did it hit the other day? 247, just above. I love the way the markets remember the horizontal levels and then come back to them within pennies. It's just
sometimes I say, Basil, it's not rocket science, folks, and it doesn't work every time, but sometimes it doesn't have to be that complicated, as in just those areas, man, where the market, it's whether it's resistance, support, and that's a great example of it, man. You talk about an area, it's like where you look at that chart, right, Basil, and if you said to someone, hey, where do you think on this chart the Russell might face some resistance as you trade higher, right? You'd say that area, and it turns around within 50 pennies, right? Hey, it's emotions, man. We're all human in the market, and emotions, yeah.
Right. So it's it's always an exciting thing, and I try to make it exciting for my subscribers. People. Well, we look. Basil, I try to identify.
You've been
numbers.
On a heck of a run, man. Robinhood. Not that it's not easy, but I think, you think like a company like that, my goodness, the multiples, but GE, my goodness, I wasn't even aware myself, I think, you think of the high flyers, GE is almost as much up as much as Robinhood in the last few years, man. You just went from $40 to $300 on GE, which, Robinhood's went from $12 to $100, but it is just a remarkable run. So congrats to you. And folks, check out the opening call. It's a great time to do it. You gain access to that webinar that he did last month, and then, of course, many others, and you get the report from a month with a 30-day money-back guarantee. Well, Basil, always a great conversation, man, and good to hear you're out there playing some tennis, and I can't wait for the next opening call. We'll be looking forward tomorrow, man. Thank you for the interview, of course.
Thank you very much, Tommy. Have a great year.
My pleasure. Always a pleasure. Take care, Basil. Basil Chapman, a great man. Check out that opening call, folks. Outstanding newsletter. You gain access to the archive webinar, and he has had some outstanding calls. He's on a run. Great time to check it out. We're coming right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. And as I was saying to Sean Edwards from Direction, it's like every day, right? Another AI story. Well, Intel, they're up by 6%. Now, they were already trading higher, but news just hit. You see this acceleration we just got? Yeah. So guess what? Intel, they're seeking an investment from Apple. Why not? NVIDIA is investing in Intel, and guess what? Apple, why not? A deal with Apple, a longtime Intel customer that switched to in-house processors in the past 5 years, would represent further validation. We'll see. But their CEO attempting a comeback, of course. He's got a backing of the government, 10% owned by the U.S. government. He's got NVIDIA being an investor, and now they're trying to get a deal done with Apple. And boy, you talk about the run that this thing is on. we just traded from $19 to $32.38 in the span of about 6 weeks, 7 weeks. Remarkable. All right, we got 5 minutes left to go until the closing bell. You got NVIDIA shares down about 0.9%. We jump over to Oracle, down by 1.7%. Amazon off by 0.25%. Apple down by 0.8%. They actually almost got a little lift on that news as well. Yeah, see that acceleration? Catching a little bit of a bid that they may be teaming up with Intel. Maybe that gets them in the good graces with the government, right? It's all a fluid negotiation going on. You better believe it. Government owns 10% of NVIDIA. Is Apple going to invest in NVIDIA? This is where you better believe that's all related. We jump back to gold. All right, bouncing off the lows, gold down by $53. You jump over to silver right now, down by about 50 pennies at 44.11. And we keep our eye on yields as we got rising yields right now. Yeah, lower price, higher yield. You're looking at a 10-year right now. Negative by almost 9 ticks. We're at 112.20, basically the lows of the session right now. All right. And we finished up with the dollar. Why not? The dollar right now didn't quite get to 98, but 97.87 on that dollar. Market's in the red. Second day of red right now. Giving it back. Folks, thanks so much for tuning in. Have a great night. Have a safe night. We'll see you back here tomorrow morning, 9 o'clock for the morning market kickoff. Thanks, folks. Have a great evening.
Building